Hello everyone, welcome to Jay's Smart US Stock Insight. On this channel, we focus on future-driven industries and US stocks with long-term growth potential, rather than chasing already overhyped mega-cap names. Our goal is simple: to break down complex market trends, investment ideas, and risks in a clear and practical way that everyday investors can understand. Today's video is not about quick profits. It's about how smart investors think about the market over time. So let's get started. The SNP500 is one of the most widely followed stock market benchmarks in the world. Rather than tracking a single company, it represents 500 of the largest and most influential publicly traded companies in the United States, spanning technology, healthcare, finance, consumer goods, and more. Because these companies operate globally, the S&P 500 is often viewed as a reflection of the overall U.S. economy. Despite recessions, wars, inflation, and financial crises, the index has shown a long-term upward trend. One major reason for this long-term growth is the profitability of its underlying companies. In recent years, corporate profit margins have remained strong, generally staying in the low teens range. Several structural factors support this: global expansion of U.S. companies, a shift toward technology and service-based businesses, improved productivity, favorable financing and tax environments during certain periods. While margins naturally fluctuate over time, the key takeaway is simple: large U.S. companies have historically found ways to remain profitable. Now let's talk about UPRO. UPRO is a leveraged, exchange-traded fund designed to deliver 3 times the daily performance of the S&P 500. That means, if the S&P 500 rises 1% in a day, UPRO aims to rise about 3%. If the index falls 1%, UPRO may fall about 3%. The most important word here is daily. Because the fund resets every day, UPRO behaves very differently from traditional long-term index funds. This is a conceptual strategy, not a recommendation. Some investors approach the market like this. During normal or rising markets, they invest a fixed amount into the S&P 500 on a regular basis. When markets experience sharp downturns or extreme fear, instead of increasing exposure to the regular index, they allocate a small, controlled portion into leveraged ETFs like UPRO. Why does this idea exist? Historically, major market declines have often been followed by strong recoveries. The strategy attempts to maintain stability in normal conditions, increase risk exposure only when prices are deeply discounted. If executed with discipline, this approach can potentially outperform simple buy-and-hold strategies. However, risk management is absolutely critical. UPRO carries extreme risk. Key risks include leverage risk, volatility and compounding risk, severe drawdowns, structural and cost risks. Because of these factors, UPRO is not suitable for long-term buy-and-hold investing. It is a short-term, tactical tool meant only for experienced investors who fully understand the risks. To summarize, the S&P 500 has historically rewarded patient investors. Remember, successful investing is about managing risk. Thanks for watching Jay's Smart US Stock Insight. Please like and subscribe.